Bismillahirrahmanirrahim. Assalamu alaikum students. Welcome accounting 4th lesson. The topic which we will discuss today is the double entry system for assets, liabilities, capital, revenue and expense. The objectives of today's lesson are: explain what is meant by double entry. Number 2, explain how the double entry system follows the rules of the accounting equation. Number 3, explain why each transaction is recorded into individual account. Number 4, describe the layout of a T account. And number 5, explain what is meant by the term debit and credit. So let's begin. I have told you in the previous sessions also that every transaction has dual effects. For example, if someone purchases a drink from a local store, he pays cash to the shopkeeper in return. He gets the bottle of drink. This is the simple transaction which has the two aspects for both of the perspectives, the buyer as well as for the seller. The buyer's cash balance would be decreased by the amount of the cost of the purchase, while on the other hand, he will acquire a bottle of drink. Conversely, the seller will be one drink shortage, through his cash balance would increase by the price of the drink. Accounting attempts to record both effects of a transaction or event on the entity's financial statements. This is the application of double entry concept. Without applying double entry concept, accounting records would only reflect a partial view of the company's affairs. Imagine if an entity purchased a machine during a year, but he records do not shows whether the machine was purchased or the cash or on credit. Perhaps the machine was bought in exchange of another machine. Such information can only be gained from accounting records if both effects of a transaction are accounted for. Traditionally, the two effects of accounting equation entry are known as debit and credit. Accounting system is based on the principles that for every debit entry there will be always be an equal credit entry, and this is known as duality principle. Double entry accounting is based on simple concept that each party in the business transaction will receive something and give something in return. In bookkeeping terms, it is received in the debit, and what is given, that is called as a credit. The T account is the representation of the scale of balance. Now, what are the accounts we are going to debit? Increase in assets, increase in expense, decrease in liability, decrease in equity, decrease in income. All these transactions will be recorded as debit entry, whereas the credit entries will be decrease in asset, decrease in expense, increase in liability, increase in equity and increase in income. Double entry is recorded in a manner that the accounting equation is always in balance. An accounting equation is assets equal to liabilities plus capital, or we can say that assets minus liabilities is equal to capital. An increase in expense debit will be offset by the decrease in assets credit, or increase in liability or equity credit, and vice versa. Hence the accounting equation will still be in equilibrium, as I have discussed this in the previous sessions as well. The double entry system, I have given you the example over here. Okay, this Y is buying something. So what is decreasing? Cash is decreasing and he is getting a CD in return it. These are some of the examples of the transactions. Let's suppose purchase of a machine by cash. Now what will be the entry we will record? The debit machine means increase in assets, and credit cash means decrease in asset. Means the both effects are going on the asset side. Number 2, payment of utility bills. The entry will be debit utility expense, increase in expense, and credit cash, decrease in assets. Interest received on bank deposit account, debit cash, increase in asset, and credit finance income, increase in income. Now we will discuss what are T accounts. The T account is a visual representation of individual accounts that looks like a T making. It is so that all additions and subtractions, those are called debits and credits in accounting terminology, the account can be easily tracked or represented visually. This is one of the example I have placed on the slide for you people. This is the visual representation of T account. On the account title we write the name of the account, and the left side is called as the debit side and the right side is called as the credit side. Let's take an example. The purchase of a machine $10,000. Now entry which we will do in our books, that will be debit machine $10,000 and credit cash $10,000. For this particular transaction we will make two T accounts. One T account will be machine and the other T account will be cash. In machine T account, as in the transaction we can see in the debit side 10,000 in increasing, but the counter account we will mention over here, that is cash, right? So similarly in the cash T account, the 10,000 amount is going to be credited, but the counter account we will mention also, that is machine. For asset accounts, which includes cash, account receivable, inventory and others, the left side of the T account, debit side, is always an increase to the account. The right side, credit side, is conversely a decrease to the asset account. For liabilities and equity accounts, however, debit always signifying a decrease to the account, while credit always signifying an increase to the account. I have shown the assets, liability and equity T account in front of you on the slide. The T account, for the income statement we have two accounts. The income statement we will discuss in the future sessions. We have two more accounts, the revenues and expense. Revenues means the gains which we are getting, and expense are the losses or the cost of the business, right? When the revenues, you can see the slides. Now when we see the accounting equation, assets equal to liabilities plus owner equity, I have given the all visual representation in front of you. Please take the look of the slide number 16. Now this you can see. Now we can take the quick recap what we did today. We tried to explain what is meant by double entry. We tried to explain how the double entry system follows the rule of the accounting equation. We explained why each transaction is recorded into individual accounts. We discussed the layout of the T account, and we tried to explain what is meant by the terms debit and credit. Now what are the home assignments I am giving to you people? Number 1, read the whole chapter number 2 thoroughly and highlight the important points. And number 2, Complete the worksheet based on the review exercises of the chapter 2 which is attached with this lesson. Try to attempt the worksheet, then I will definitely give you the solution of this to you in the future session. So stay home, stay safe, do the scheduled studies, offer namaz regularly, follow the instructions of your parents, hoping for the good days. Take care. Allah Hafiz.